It felt like the day the music stopped. 1 minute, everything was fine. The next, gold, silver, and crypto, assets that are supposed to move in opposite directions, all nosedive together. News tickers flashed red across the board. The impossible was happening, and it left everyone asking, what on earth just went down? Well, the answer is a classic liquidity trap, but on a massive scale. Picture this. Big institutional players, the whales of the market, suddenly faced a tsunami of margin calls. This happens when their leveraged bets go sour, and their brokers demand more cash right now. To raise that cash, they don't just sell their losing positions, they sell everything. They sell their winners, their losers, and most importantly, their safe havens. Gold, silver, it all gets liquidated in a desperate scramble for cash. It's not about fundamentals anymore. It's a fire sale where everything must go. And what triggered this panic? The US dollar. After months of being on the back foot, the dollar suddenly roared back to life. Why? We got some unexpected inflation data that came in cooler than anticipated. This spooked the market into thinking the Federal Reserve might not cut interest rates as aggressively as everyone had hoped. Traders who were betting against the dollar got caught completely off guard. As the dollar surged, it acts like a wrecking ball for global commodities priced in dollars. Gold and silver, which are priced in dollars, suddenly became more expensive for foreign buyers, crushing their demand and sending prices tumbling. This is where the story gets really interesting for crypto. For years, we've heard the narrative, Bitcoin is digital gold. It's supposed to be a hedge against inflation, a safe haven separate from the traditional system. But when the chaos hit, what did Bitcoin do? It behaved less like digital gold and more like a high-risk tech stock. It plunged right alongside everything else, proving that in a true liquidity crisis, even the new age safe havens aren't safe. The panic showed that large investors still view crypto as a risk-on asset, one of the first things to get dumped when they need cash fast. Its status as a reliable hedge took a major hit. So, where do we go from here? Is this the start of a dreaded doom loop, or just a healthy, albeit painful, market correction? I've been talking to analysts, and the consensus is fascinating. While the short-term picture looks messy, the long-term fundamentals for precious metals remain incredibly strong. We are seeing central banks around the world buying gold at a record pace. They're not panic selling, they're accumulating. Plus, looking ahead to 2026 and beyond, there are serious structural supply shortages on the horizon for both gold and silver. Demand is set to outstrip supply, which is a powerful recipe for higher prices once this dust settles. Navigating this market feels like trying to find your way in a rigged game, but there are ways to protect yourself. The key is to avoid panic selling and focus on the long-term trend. This crash was a liquidity event, not a fundamental one. For savvy investors, these brutal shakeouts can be opportunities. It's about dollar-cost averaging into quality assets when there's blood in the streets. Identifying the bottom is nearly impossible, but you can build a resilient portfolio by diversifying and not using leverage you can't afford. Stay informed, stay patient, and remember that in markets, fear creates opportunity. Thanks for watching, and don't forget to subscribe for more insights.